In this video, we are going to be analysing KGC. If you go over to Yahoo Finance, we can see in their penny stock watch list, which I know a lot of people are watching. This is one of the 30, but is also the one in there with the largest market cap. So usually when the market cap's a bit easier, it's not as moved by hype, so usually it can be a bit easier to trade. So that's one thing to note when trading stocks like the KGC. If you're looking to trade small caps, is they trade more reasonable, and that is quite good because it's easier to predict where we're going to go. And we can see obviously we are on this incline. We went from a 52-week low of $3. We're now around $3.80, and really we have our first deviation at $3.98. So really, if KGC can push up to around $4, this is going to be really a heavy resistance. We can see this was the low over here, so definitely a key support level, even if you're just going off technicals and not even psychological levels. But really, we got four reasons for entry here. We've got a psychological level, we have a pivot, and we also have a statistical mean at this level. A first deviation at this level. So really three key areas of resistance. So if KGC pushes up to here, definitely something we could be getting. Well, if you're long, definitely an area to be looking in profits, and or at least moving your stops. But also definitely a key area if you could just want to look for a scalp short. Obviously with these kind of stocks, we don't tend, or at least I don't like to hold them overnight. They're more day trading stocks, but really I don't trade small caps all that much. I have moved a lot more to large cap side of things. But that would definitely be the key level. However, if we do break through there, we would be paying attention to around 430. So that would be our first deviation on the 1 year chart. Then if we break that, our next level, key level, $500 again. As you can see, three things line up: key psychological level, statistical or second statistical deviation, and also a key resistance level or pivot, depending on how you look at them. So definitely another key level. I don't think we'll be going through that in the near future unless there's some sort of hype or momentum going on in this stock. But if it's trading on a reasonable basis, we probably won't see a break above there. Now, if you break that, we're looking at $5.50, $6, and final levels taking us to $6.50, $7, and $7.63. So again, yes, we do have a lot of levels here, but you don't need to pay attention to all of them. All you need to do is pay attention to the closest level. So as of right now, that's $4. So all you really need to pay attention to is, firstly, can we break the $4? Again, we would expect some sort of a pullback coming into this level, but if in time we come back to retest, we can break above it. What you want to see is a break above this level, come back to retest it as a support. If this level holds, then we see that as confirmation, and more than likely you will push to that next resistance level, in this case $4.30. So again, then you would look for the same thing. Then you ignore this $4 level. Your main focus is $4.30. Can we break above it? Yes, let's say we can. You come back to retest it as a support. If this level holds, then your only focus is the target, which in this case is now going to be $5. So you just use these levels in expectations that it will go to the next one if we can hold the break. Now, on the other hand, if you're looking at supports, what are we paying attention to? And really the key ones, because they're closest to where we are now, is going to be $3 and $3.25, because these are our statistical means of both the 6-month and the 1 year chart. So these are our closest supports. Now, if we break that, then we are looking at $2.15 and $2, as these are our first deviations on the daily. And at extreme sell-offs, if we start pushing, I mean, it would require quite a large sell-off from where we are now, but the final levels would be $1 and $1.10. And if we break that, then really it would be something, if we break below the dollar, usually it's very hard for stocks to break $1. So if you broke it, it would become some concern and something we wouldn't really look to trade.